Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 3rd, and Happy New Year's to everybody. Hope you guys had a great, safe, long weekend here. Hey, we got just a couple items here, and we'll start off with the market PMI. This is the final version of the market PMI manufacturing numbers here. So the previous reporting on December was 54.2, and it had a slight increase to 54.3. So not a lot of wiggle room in there or movement on there, but good numbers still. Anything above 50 is considered expansion. Same thing with this ISM numbers, also another index for manufacturing. Anything above 50 is expansion, anything below becomes contraction. So previous reporting came in at 53.2%, and forecast was to go up to 54.4, and it exceeded that. So much better than the expectation at 54.7% from ISM. So good manufacturing seems to be rebounding a bit here. We also got construction spending, which is looking good. As you can see, back in October, we had a 0.5% increase. For the month of November, they thought it would increase by 0.6% and actually exceeded that by 0.9%. So great overall numbers here. Great movement for the economy where we're moving. Now, the big numbers we're going to be watching for this week will be on Friday when we get the Bureau of Labor Statistics reports on job numbers. So tomorrow, being Wednesday, we should get the ADP numbers and weekly jobless claims. So these numbers could probably sway markets to give us insight as to which way to go. I believe they're looking for approximately about 175,000 new jobs created for the month of December. So just be prepared for possible volatile week, especially after having the last week or two off. A lot of these big hedge fund guys are back in town. They get fresh new money for pension funds and stuff, putting it into the markets. And where they put it, I guess it's remain to be seen. Is it still going to start putting equity in markets as we saw a big influx of that big spike after the Trump won in the stock market, reaching almost 20,000. We kept reaching new heights. It pulled back a little bit last week. It went down about 1.1%. The markets did overall. So it kind of gave them a little bit of a breather there, so to speak. So today the stock market's up. It did cool off a little bit. Dow was actually up as much as 160. Now it's hovering right around 70 so far this morning. A lot of it came out that we had some better economic data coming out of Europe and China. China had some nice manufacturing numbers. Europe was just kind of building off their market yesterday. And then also oil price, you're starting to see a bit more of a spike up there, which of course, that helps with the economy, or at least shows that the economy is progressing forward. And right now we're at about $55 per barrel right now. This is about the highest we've been in the last approximately 2 years right now for oil prices. So let's take a look at the bond market. And as you can see, we did drop quite a bit. So we ended the year off right up here, which was a pretty good. We tested this first resistance level, did break it. So this week, we start off way down here, which is about 34 basis points lower, which of course get worse pricing. East Coast will be starting up down here. Right now, here on the West Coast, we're right now about 19, 16 basis points lower, which is still worse pricing, but we'll get a little bit better pricing from those on the East Coast as we come up with our pricing today. Hopefully we can see this hold here. We're now resting about this 25-day moving average, which is about the same as this first resistance level right here, or first floor, which is giving us a little bit of support here, and hopefully keeps us above here. Now, we should get a better outlook as to where the bond market is going to be if we can continue this. Obviously, we broke the elevator of going this upward trend here by starting off way down here, but we'll see if we can maybe start a new one here, this week or not, depending on jobs reports and where the big hedge fund guys are comfortable at. Also, we've been kind of seeing yields. Last week kind of dropped down. They were up to about like 2.6. And they finished off the year at 2.43, and then so far this morning it went up to about 2.5. So we'll kind of wait and see where the global yields go up. But that was the 10-year Treasury going upwards. So we'll have to kind of wait and see what that does. So basically, what it is competing for dollars in the market. The mortgage-backed securities here, which affects our interest rates, to the yields, to the stock market, and we'll kind of wait and see what happens as we move forward. But I would kind of wait and see. If you've got rates out there floating, like you're refinancing or buying, I would kind of hold and see before locking in here, see if we can continue this upward trend. We are kind of bouncing back a little bit so far this morning, so that's a positive sign for us. especially after the big boys were here after a slow week last week with the trading out there. So anyways, hope that helps. If you guys want to get more data throughout the day, I do post on Twitter. You can find me at Mike Bjork here, and I do post on Twitter, so you can find me there as well. All right, folks, you guys have a wonderful day. Thanks so much for watching. I'll see you guys tomorrow. Take care. Bye-bye.